Good morning, everybody. Welcome to today's webinar. We're going to be having a look at our interim tax certificates preparation and the reporting that you can use to try and make your life a little bit easier, and how you can get all this data out of the different payroll softwares we're going to be looking at today. So a big welcome to everybody, and a welcome to my fellow panelists. We have Sam, who will be running through the People 300, and Charlene, who will be running through the the VIP, and myself who will be going through the Psiber stuff. So without any further ado, let's begin this. So today we're going to be having a look at just an overview of the information that SARS looks at, common problems that we come across, and then we'll go have a look at specifics. We have a look at where in Psiber, which reports we suggest you look at, and where you can go and find those. And then we'll move on. I'll hand over at that stage to Charlene to have a look at the VIP. And then after that, we'll hand over to Sam to have a look at the Sage 300 people. So I'm just waiting for my screen to up. That should do it. There we go. Okay, so there's the agenda. That's what we're going to be having a look at. We'll have a look at the overview and then each of those items underneath, and then we'll hand over to the specifics for each of those softwares. So for the purpose of this training or this presentation, we'll assume that you have your EMPSA or your EMP501s or some sort of reconciliation on what payments have been made to SARS or what payroll says these values should be. And you should have that right up until the August payroll. We will assume that you have a basic understanding of the payroll software that you are currently using and that you can navigate around the system. And then in big blue letters there, if you are registered with SARS, you have to submit the EMP501 biannually. SARS have recently started doing an interesting little exercise of penalizing people who have defunct or non-trading entities, where they are starting to, so I'm seeing a notice pop up. Okay, guys, I'm just seeing that people are saying that they can't hear me properly. If you can hear me, or if you're struggling to hear me, would you mind raising your hand just so I can see if there's something that we can perhaps do about this? Okay, there doesn't seem to be anybody responding to that. Okay, great. Thank you very much for that feedback. All right, so, okay, great. But Connie, so perhaps we can try and have a chat with you again after this, if that's okay. That perhaps there's a glitch on your side. It doesn't appear to be from the transmission. Excellent. Okay. Basically, if you're registered with SARS, you have to submit your return biannually. And in that, SARS have started looking at the companies that are defunct or are not trading, and they're instituting penalties if you haven't done your submission. So even if your submission needs to be 0, please make sure that you do go ahead and get that submission in place. Okay, so our interim submission, during this time, we submit everything from March to August, and the submission deadline is the 31st or the last day of October. So, obviously we want to try and run that in as soon as possible, but that is the absolute deadline. A full employee validation takes place, so they check all of the details that we'll get into later, names, addresses, and all that fun stuff, as well as our ETA claiming cycle that ends in August. So hopefully any adjustments that need to be made, unfortunately we're already in September, so any adjustments or anything that needed to be made needed to be done in the August payroll. So remembering that ETR works in 6-month sections, and unfortunately they're very rigid about those 6 months. And if you can't carry any values over or do any corrections, once that 6-month segment has passed, and the 6-month segments are March to August, and then September to February the next year. As there was in the last submission, there are some challenges this submission with the ETR. Now, it was only for the August period, so everything up to then should be fine. but the August period, we did have the relaxation of the requirements for ETR. So please be aware of that, and anything else that may be in there. If you, that's very badly said. So please make sure that you've checked your ETR, that you've checked your 201s, that they all match up, and that if you utilize the reduced ETR values or the reduced ETR requirements and that increased your values, that you've recorded those correctly as well. If you have any TERS payments that have come through from the beginning of the year that are non-taxable payments, please make sure you use the correct SARS codes there as well. So those would have been specific industries that have been allowed an extension during the lockdowns. Given that there are a lot of uncertainties around those things, how they get reported and that sort of thing, it's prudent to try and get that information earlier as far as possible, and try and get your submissions in early in case you do pick up any submission issues that you want to get sorted out. So what are our common problems that we find? We find that our master file details are not up to scratch, and we find that there's some information that sometimes isn't always as complete on the take-on documentation and or subsequent updates that may need to be there. So the stuff that I have there in blue is stuff that we can do now to fix this submission, and in green the whole way through the presentation will be stuff that you can look at implementing so that you don't have these issues going forward. So if we have a look at master file details, we'll have a look at some reporting later on, is to get the details early enough so that you have enough time to get the updates, so that you're not rushing at the last minute trying to find somebody's address or somebody's updated surname. But to try and alleviate those problems, always try when you're doing your onboarding, your take on, whatever wording you prefer to use, that you get your documentation correct up front. So make sure that you've got the guys' addresses, their ID numbers, and all those fun fields that are so challenging, shall we call them, getting out of people when it's later on in the tax year. Okay, so information that we look for is surname, first name, and not just initials. Often we find that people just supply initials. Residential and postal addresses. Now, while they may be the same, it does need to be in the complete SARS layout. Country code. So remember that we also need to have the country code in there, which is ZA if you're on Psiber. Some others if you are like ZAF if you're on the Sage Pastel products. So just remember that you do need to select your country code, and the addresses need to be in the SARS format and include all of the information that's required, and specifically things like postal codes, which often get omitted. We also look for ID number or passport number, and remember it has to be a valid one, so do let the system do your validation where it does, or be prepared at when you're doing your upload into the Easyfile software that your ID numbers may then reject at that stage, because they do a verification at that stage. The passport number, if you do have people that are foreign nationals that have a passport, remember that more information is required about a passport than just its passport number. So for argument's sake, we do need the date of issue and the date of renewal, or the date that it's valid until rather than renewal, and what country. So we can't just have the number. It's not just like an ID number where we just punch in the number and everything is fine. Tax reference numbers, we can't say enough or too little about these tax reference numbers. If you're working, you're required to have one. SARS is pushing to make this the employer's responsibility. Employers are pushing back, obviously, because they can't access this information all that easily. However, if you're employing someone that has worked before, they should have a tax reference number. If you're employing somebody brand new, they may not have a tax reference number. We can assist in trying to obtain those numbers, but it is something that needs to be obtained and to be updated to the system, because it pulls through to the IRP5s. And SARS have been for a little while now moving that from making that a required field. So moving it from a warning error message to a mandatory, and then also starting to say that they're going to start to impose admin penalties if you don't have all of those. So it's important to try and get those numbers, get them in early, and especially if you can get them at take on time. And the next problem is the most obvious one, and that is where your EMPSA or your EMP201s don't match up with payroll. Okay, so we like to make sure that these balance on a monthly basis to make sure that we're aware of any issues that may need to be resolved, so that we're not looking all of a sudden at 6 months worth of data that we have to try now and establish where things have happened, what things have happened, and that sort of fun stuff. So why does this happen? Well, it ranges from the most basic stuff, from somebody accidentally capturing something incorrectly, to something as interesting as an additional run not being costed correctly. So there's lots of things that could happen that could cause your values not to match. It's much easier if you do that on a monthly basis to make sure that your values do match up. So that's just something that we would suggest that you do. And the last piece underneath here is the ETR values not matching up to the declared values. Now, this one can be fairly serious in that if you've overrun your 6-month period, there's not terribly much that you can do about it. If you have over-declared, in other words, you have claimed too much ETR, get that adjustment in as fast as possible, because the longer you leave it, the higher the penalties and the interest on the unpaid amounts is going to be. So if you've overclaimed by R1,000 and you catch it in the next month, 10% of that R1,000 is not going to be the end of the world. It's not pleasant, but it's at least there. If you leave it until 12 months later, perhaps it could be a significantly more money. So guys, please, penalties, interest does occur if you have made errors with the ETR. If you have underclaimed and you're outside of the 6-month period, that money is potentially lost as well. So please, try and be very, very careful with your ETR. And again, check it on a monthly basis so that any adjustments can be made and that the adjustments can be put in to your EMP201s as soon as is humanly possible. All right. And that's sort of the end of the common problems and challenges and the bits and pieces that we have around what to look for. And let's have a look in a little bit more detail now at the Psiber reporting that would be required for you to be able to get to these fields, the reports that we tend to use and how we use them. So first up is our employee master information. So one of the first places to go to is your tax certificate exceptions summary. And you can run this report at any point, but we're looking at it running it now at after the August payroll has run, and obviously before the October deadline. So what we're looking at here is we want to have a look at this report to pick up what the system says any issues may be on the Easyfile upload. Okay, it doesn't display any values, so we don't do a financial check here, but it's really useful to see where the payroll system is looking and saying this is where we believe there's going to be a problem with your SARS validation. Okay. So how do we get to it? After you've logged into the system, you're going to go to your reports tab. You're going to scroll down until you find or use the search bar to find the tax certificate exception summary. You're going to go next. You're going to select your payroll if you have multiple payrolls that you have access to. You're going to select your period type, and this is where it becomes a little bit more interesting. We would suggest that you're going to run it in the tax year and you're going to be looking at the current tax year, unless, of course, you're running it at the end of February where you would be looking at the previous tax year. So in other words, at a full submission period, you'll be looking at previous tax year, but in the interim, you're always looking at current tax year. And then we would select under the reporting type, the interim, the first 6 months. Your other options are there for the full tax year, or alternately up till the last accepted payroll. Now, the differences there mean that you could run this in January in preparation for the end of year, or you could have run it theoretically in July prior to the August payroll to make sure that everything is in line so that when you run August, everything is okay. Okay, when we run that report, and then obviously you're just going to click on generate to create this. You can select multiple or individual exception types. So for argument's sake, you want to see who's got a malformed address. So you could run that one. Or you want to see who's missing an ID number. You could do that. Or tax reference number. You could do that. Depending on how you want to approach it. I tend to run it for everything and have a look at that. And then I may isolate, so for argument's sake, tax reference number if there's a lot of those errors. But generally, we're trying to work through all the errors. So I want a report that has everything. You then process the report, generate it, and you get something that looks something along these lines. And it will give you the employee's name, the employee number, the certificate that's been generated for them, if there is one. Not always going to have that certificate number generated. And then you're going to get the error. It's going to say, this case is employee tax reference number, and what it is the mandatory field is missing. Okay. So that's all good and well. That's how you find the information. How do we go about correcting it? How do we go about sorting it out? So we can use the personal information update form. It's quite a nice report. It gives you all of the information that is already on the master file with a space for you to be able to update it on the form itself. Okay. Hopefully we're not doing this from scratch where we've got people with massive amounts of data missing. Hopefully you've got one or two people with a bit of data missing. This report makes a lot more sense. Again, to run it, I don't really want to bore everybody with exactly how we go to each different screen, but basically you're going to go to your report screen. You're going to select this personal information update form from the list of reports. You're going to skip through the fields until you get to the employees list. And then you're going to select the required people. If you want everybody, then obviously you're going to select everybody. And when we generate the report, we're going to get something that looks along the lines of this report that's on screen now. You can see the employee number, the ID numbers at the top. If they need to change anything, they can fill in the updated details. It also can run bank details and that sort of fun stuff as well, so that they can make sure that those are also fine. We have noticed that SARS, for some reason, if the person has a check account and the payroll is an old historical type payroll where everything was loaded as a savings account, that they may have a problem when they're submitting IRP5. So it is something for them to look at, potentially just to update, to make their lives a little bit easier when they're doing their submission. And moving on, we get to our EMP501 and our 501 Eti reconciliation reports. Okay, so these reports we use to verify that our manual or our EMP201s, our declaration or our manual reconciliation, matches to what is on payroll, which matches to what is coming out on the certificates. Okay, so the EMP501 should be compared against the declared liabilities on the EMPSA or the EMP201s, and ensure that both the monthly and the totals for the SDL, PAYE, and UIF all balance. Okay. The Eti Recon will allow you to see how much of Eti has been claimed via payroll for the periods. So in this case, that will be from March to August. We use that in conjunction with some other Eti reports to be able to make sure that we're all fine at that stage. So first of all, here's the EMP501. Now, I've specifically chosen one from a previous period because I also wanted to show that in August of this year, we have had that possibility of people using that 35% deferral. So we need to be able to make sure that we are looking carefully at, did you request a deferral? And if you did, is it reflecting correctly on your EMP501? Remember, the 501 from payroll that's coming out of payroll will not reflect a 35% reduction. Okay. Remember, payroll reflects it as complete because that money is actually due, and that it would have been done subsequently or outside of payroll where you would have reduced it by 35%. It's just something to be aware of when you're doing it, and not all of a sudden get a big heart attack and think that you've short paid your PAYE in August if you have utilized that. If there was any SDL holidays or if there was anything out of place, sorry, accidentally clicked my mouse, then that would also then show up in the 501 reconciliation. If we have a look at our ETI, we can then see the total value of the PAYE that was declared on payroll, then what ETI has been reduced, and the net PAYE. So payroll should reflect this value, and the certificate total should reflect that, but the payment should reflect this side, and the ETI value should reflect on with these values. Okay, so it's important that we check these values cross-check correctly, both in individual line items as well as in total. So for argument's sake, if this was the wrong way around, if we had a 6,000 Rand and a 3,000 Rand the other way around, and our declared values were not the same, then we would have a challenge. We would need to relook at that and how you could be able to resubmit that. Because although in total it's correct, on the individual lines it's different. And when that goes through to the certificate values, they won't pull through correctly, and it will start to cause you some grey hair. Okay, if we move on now to the ETI qualifying employees. In this report, you can see what the detail is of who's claimed ETI and the total values. Now, obviously, we're looking to make sure that this total value that we have for our March period, for argument's sake, matches up to our March period here. And as I was saying, if these values don't tie up, this would be the report that you would use in March, April, May, June, blah, 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 to see why they don't tie up with what you were doing. And then you would need to make an assessment of whether you need to resubmit some 201s or what it is that you need to do to achieve that balancing. Okay, and that's sort of the end of where we get to from a Psiber perspective, and how we would balance and get to those bits and pieces that we need to. Important bits to note, guys, is it's really an interesting time of year, this. SARS have been playing some interesting changes on their side in as far as the EMP501 profiles. In other words, the profile that you use to do your submission itself. If you're an HR Talk client, we check those profiles fairly regularly, and we try and make sure that we get them. But SARS has been doing some interesting stuff in changing the way those profiles are handled, changing how they get released, and in some cases, even ending up with revoking those profiles. So it's just something that you need to, please don't leave this if you're doing it yourself. Don't assume that because last submission you had the profile to do the submission, that you still have that profile. Go in and check, make sure that you've still got your EMP501 submission profile, and make sure that you can still actually do it well before deadline. There are situations that happen where, so for some reason, that profile is revoked, and then it can take a very long time to get that profile back again. It can be quite an involved process if all of the criteria are not met. So from that side, please, guys, try and get it done early so that you save yourself some grey hair and potentially some penalties and interest for not submitting on time. And with that, I will hand over to Charlene. Thank you very much for your time.
Morning all. Let me just quickly share my screen and then we can get on the way with the VIP portion. Carl, I think you need to give me access, please, because it's not allowing me to.
Just the share. I think that should do it. I think you should be able to do that. Stop share. You should be able to take it now. But viewing the EMP501s. Okay, Janine, with your EMP501 being able to view that, there is a section under the Easyfile, under the, I'm going to come back to you. I can't remember the exact screen name, but yes, you do have to go through a separate installation for that, that form viewer, and it's not clear where it goes to. So, Charlene, if you'll carry on, I will just look up that that screen, and once you're done to Sam, I will just respond.
Okay, certainly. Can everybody see my screen, please? Morning all. I'm going to be covering the part of the Sage VIP Premier mid-year submission. I'm just going to brush over a few points before I go into the reports, etc., that we've got to extract. If there's any questions, just raise them and we'll try and answer them after the session, or alternatively, you can just drop us an email as well. Okay, and let's get started. Okay. You need to ensure that you're on the latest version. The release was 5.7a. This was made available on the 1st of September, and you could also use it to then do your additional ETI claims if you made use of it. The ETI relief that came into effect rather late and caused a bit of a panic with the August pay runs. You also need to make sure that sorry, you don't need to make a copy of your system for the Eti Recon submission. This is a question that's popped up quite a few times as well. And you also need to just ensure that when you start running it, all your companies are either in your final period for August, but that shouldn't be a problem because we've all moved on to September for now. Okay. On release 5.7, there was just a few changes that I think we need to take note of, because this will actually affect your mid-year submission. Just ensure that there's 2 codes that's been discontinued. And then the other big change that came into play was how we record tax directives going forward. There's now 3 new codes that's come into play that is going to affect how you record it on the file. The update has brought this into play, but you still need to just actually go and make small changes for anybody that has received tax directives from March to August, as the system doesn't have the capacity or the ability to automatically update this because it requires additional information. If you go through to your statutory details screen for individuals, you will now notice that there is no longer space for 3 tax directive numbers as it had in the past, as well as the fixed percentage. It will only allow you 1 for fixed rate directives. And there's a new little tab at the bottom that shows you your lump sum directives. And on the right-hand side of the screen there, it gives you I've just done a screenshot to show you what it looks like. You will need to go in, your directives will be populated, however, your date issued, source code, and amount will not automatically reflect. Draw a list of your actual directives that has been processed and just go and update these details so that when you pull your file through to Easyfile for submission, it won't give you a failure on this item at least. We never know what other tricks might pop up. This is just a little heads up on that, as it is quite a big change that has come into play. And we've just noticed in general with a lot of our employers that there has been quite a few directives issued during the first 6 months of the year for various reasons. Then on to just extracting your reports. The easiest way to do this on Premier would be to make use of the RSA submissions process. The reason I prefer to use this is due to the fact that once you've run through this whole process, it creates a folder in your current payroll directory, which you can then actually copy onto a separate space to actually keep for safeguarding and for record purposes. It's just a nice, easy flow process that sort of like just helps you also to record things, which is always useful from an audit perspective. The only challenge that we have with this is if you have multiple companies making use of the same, that uses the same PAYE number, for instance, your exec payroll, your main payroll, and a wages payroll, you need to run this process in all 3 of those companies. Otherwise, it will not allow you to pull consolidated reporting. Just the screen will just show you your preparation steps. You've got 7 steps to run through. You've got a help functionality, which is very useful if you do get stuck. The big thing, though, is once you've done it, ensure that your step complete is ticked. Otherwise, it will not allow you to do the consolidated reporting. That's all pretty straightforward. And the nice thing is there is a checklist that you can print off, as well as support videos should you get stuck on anything, or you could just reach out to us at HR Talk to assist as well. Here is the SAR submission reports folder that I noted earlier. It automatically saves it once you've, and if you need to actually access this at any time, you can just click on the link and it will automatically take you to the directory where this is saved. Your first step would be obviously to do the validation of your company information. Always an important step to take note of is your contact person details for IRP5 purposes. Often this is not updated, and then you complain that you can't understand why there's no reach out to you, why you're not getting follow up, why queries aren't being raised. In the meantime, the emails are going to a person that is no longer with the organization. So just again, as Carl also noted, always best practice to ensure that all details are up to date, not only for staff, but for your companies as well. On your company screen, just your basic things to take note of to actually ensure that all is updated. Ensure that, especially if you have multiple companies, that your PAYE reference numbers are the same, loaded correctly. Sometimes what happens, you're in a hurry, you create a secondary payroll for a branch, or you suddenly have to split off the exec payroll. You don't actually copy everything across. You just type in X's, and then when you get to the point where you need to do your consoles, there is a problem and your reports are not pulling out for all the entities that you require. Another very important point to take note of is that when you need to do your mid-year submission, this is more for your end of tax year, but for your mid-year submission as well, ensure that at least all your companies are either in August or in a period after August in order to do this, as well as ensure that you have completed your periods properly. Sometimes you have a company that is stopped trading, or that is dormant, or it was dormatized, or staff was transferred out and it's stuck in, for instance, period 3, where all your other companies are in period 6. It will then also not allow you to pull that in as part of your console reporting. Next step, validate your employee information. Also, as Carl has said, sometimes we miss things or we don't have all the information. People are very hesitant to part with information these days, seemingly, especially when you do take-ons, or you just don't get the information at all timeously when you do your take-on. You could also, I just want to go through there. This is the report that will pull to say what mandatory information is outstanding. Again, tax numbers is always a very big challenge. Address details as well. Once you've gotten all of this out, you can also then, if you've got a bulk load of information that has to come in, you can use the Flexi facility to pull it in for your company instead of going to go and recapture it for every single individual person. The next step would be to do your retirement fund validations, your additional information as well, just the standard reporting, all the steps following through here on how to do this, what to do. For this, I see there is a chat question. Sorry, just check. I think seriously. Apologies for that. To validate your additional information, it would be your tax statuses, things like that. These are all part of your information that is which is part of your personal take-on details that sometimes do get missed but can cause failures, and also ultimately, as Carl said, could lead to penalties in the way forward. This is what the report basically looks like. These are just samples of the reporting that comes out in the whole process, which is quite nice to have a look at. It just gives you a lot of information And I'm just running through the screens here so that you can just see what they look like. If there's any questions or if you're struggling with anything, just do let me know. Once you've done all your validations, you can actually start with your process of reconciling. One other thing that we need to just take note of is your retirement fund validations as well. It's a good time to do a little bit of a cleanup, do a quick recon maybe back to your funds, because sometimes there's changes that are not fully reflected. Again, what the information that you put in at the time is what actually helps with your output and makes your submissions at the end of the tax year a lot easier and a lot cleaner. This is what the retirement fund validation report looks like. Again, all very useful things, very useful reports. I suggest printing them, keeping them. Always nice when you need to look back, or if you have a audit query that needs to be resolved. This just really does assist you, because as you know, with VIP, you cannot go back to in previous periods and print a lot of these reports. Your basic reconciliation process, again, due to the tools and widgets that you've got, it actually makes it a lot easier. There is 3 reports that needs to be printed that will assist you in reconciling and balancing. And if you do your reconciling and balancing up front, it makes your submission so much easier. So we have the 12-month report, the history report, and the ETI history report that you need to print as well. And this is the EMP501 recon that needs to be populated from, you populate the yellow sections from your EMP201s that you've actually submitted, apologies, to SARS. And any differences you can then investigate here, try and see whether it's an issue on your payroll submission or whether it was actually an issue when you did your submission. A big challenge that we sometimes find is that there's last minute changes after payroll has done all the reporting and submitted it to finance, and HR would pop in and go, oh, we've got this, we've got that. A change occurs and it doesn't actually flow through thoroughly to your finance team, and there is sometimes small discrepancies or issues that pop up here. I'll cover more of that on reasons why submissions are not balancing when I move forward. Again, if you pick up any differences, best practice to run the following 3 reports. However, I do still think it's good practice to just print them and keep them on file in any case from a record perspective. Just samples of what the reports look like. The 12-month report, all of you would be very familiar with this in any case. Just also, you can run your history report. And the very important ETI history report, due to the last minute changes and the challenges that we constantly face with ETI balancing. Now, once you've balanced everything, you can then do your test run, which is now, sorry, I've got a terrible frog in my throat. We do our test run, which we then input into Easyfile to see what other issues we might encounter there. Just the steps to run it through. It's a periodic run. You can also do this from your main reporting menu if you do not wish to use the tool for your SARS submissions. These are just samples of the reports, which is available that you can on the recording as well for further reference. Again, you can either do the current company or multiple companies, and all companies with the same PAYE number will be shown separate, will be shown together in one disk. Important that they're all in the same period and that your PAYE numbers are loaded. Otherwise, it will not show. Also, whoever is running the reports will need access to all the passwords. So it would normally be your more senior person, especially if there is, for instance, an exec payroll involved. You just also double check that your company details are pulling through correctly. All the relevant information should be there. especially your IRP5 contact details. Sometimes this is just left blank or with just random dummy details, which then leads to problems should there be a query coming back from SARS. These are standard reports that is generated every time you do this, or alternatively, if you're just doing your second test run, you don't need to run the reports because you just want to pull your file into Easyfile. Once you do your live run, I would suggest running these reports also just for records. Very important to remember during the mid-year submission, there is no IRP5s generated. This is purely your standard procedure with saving your file into your destination. Also, you can define the naming configuration. However, the most important part that has to remain in place is the IRP5-2122, which is for the relevant tax year that you are currently running. The front part, I always suggest to label your files, your test, as well as your live run, in order to define which is which, and for further, should you have to do a resubmit at any point in time, you use your live one, but you do have a copy of your test one should your live one be corrupted. Your file is once you've run your file, it's saved in a designated space. Keep them all together. Also, a suggestion would be to save them on a separate drive or server for reference purposes going on. Your standard reconciliation reports that we pull out that you can use, have a look at them, review them, file them, keep them in a safe spot for reference purposes. You're all very familiar with these, and then once you've got your test file ready, you can pull it into your Easyfile. These are just some steps. Nothing much has changed on this. Very important to note that you need to keep track of which version of Easyfile you should be on, and also, as Carl has noted, with the document viewer, that there's been some challenges with as well. Once you've imported your file, it will pass either with a valid, it would pass validation, and it would be either with warnings or with it will have a fail. If it has failed, there's possible reasons that there's quite a few reasons that we've got at the moment. One of the big ones is the tax directives or the tax directive numbers periods that is not being populated fully. There is also some challenges with foreign income earning codes that need to be reviewed and ensure that those are all correct and that your values tie up. In some instances, they are not, they are causing some headaches we've picked up. Other than that, I haven't encountered any major difficulties with any of my Premier submissions. Apologies, my voice seems to be going. Here's just more samples of the screenshots. I'm sorry. And we will, sorry, I just really am struggling with my voice at the moment. Once your file has passed with warnings and marks test data, you need to just shift over, pull out your live file, and then re-import it. And you can then do your full submission and carry on with it. Sorry. I just need to mute for a moment.
Please, can you make me a cup of coffee?
Apologies for that. I seem to have picked up a bug in my throat.
No, that's the only time. Okay, sorry.
And with that, I'm at the end of my presentation, which has run out of steam quite dramatically at the end there. I do apologize for that. If there's any queries or any further questions, please do reach out and I will do my best to assist with it as promptly as possible. There is nothing further from my side. And I'll hand over to Sam.
Good morning, everybody. Hope you're all doing well. Thank you, Charlene. That was a lot of information shared. If you have any specific questions right now while I'm switching over, please put them in the box so we can answer them.
Hey, can I be stated now? Okay. Yeah.
Do 1 or 2 gentle press-ups. Knees down, press up. Stretch the muscles.
Carl, would you mind muting yourself? Okay, can everyone see my screen? Can I just get a thumbs up or a yes? Can you see my screen? Carl, Charlene, could you just
Sam,
perhaps...
you're all good.
Okay, great, thank you. So I'm going to be speaking about the Sage 300 system. Carl and Charlene have already covered a lot of information, so I'm not going to repeat anything that they've said. They've both shared very valuable information about the reconciliations, about problems that you could pick up, why it would be rejected, etc. So I'm not going to repeat that for the sake of just keeping the momentum going. I'm going to run through the reports on the Sage system, and I'll also give you some reasons as to why your recon might not be balancing. And this would be valid for your Psiber system or your VIP system, and even for your Sage 300 system. It's generally the same issues that you pick up. It's not generally system related, but more with changes that have been made and things like that. So on Sage 300, you have your validation report. This is then as well to show any exceptions on the employee information that you might find on the system, that input that hasn't been entered into the system. So to access this report, you would go to your tax certificate export screen from the navigation pane. You would expand the exports option. You would double click on the tax certificate export option. The tax certificate export option will then display, and in the company field, you would click on the drop down and select the tax year end submission option. And in the tax year field, you would click on the drop down and select the correct year. In the export type field, you would click on the drop down and select the validation run option. So when even in VIP, if you are in the validation section, you can, especially if you're going from the tax certificate export, you can either do live or validation. If you accidentally choose live and you continue, when you want to go back, it's going to show you that you've already run this. So you would have to override that ride. But so it's always good to be careful to make sure that you select the validation option. So in the include column, you would tick the box next to the reconciliation company rule. You would click on the export CSV button, and then you will right click anywhere on the body of the screen to be able to export it into PDF. And this is the report that you will get out. It's going to show you personal information, company information, and then even tax codes where there may be errors. So for example, what we found at the end of the tax year was that SARS had suddenly implemented the 4115 code, which was a tax code that had to be accommodating the 3901 code, which was a lump sum code. And even if there was no tax to be deducted, you still had to go in and manually adjust that tax certificate and put the source code 4115 in and then put a 0. So this report will pull up all of those different kinds of errors that you would find from employee to company to IRP5 source codes. So where you have employee detail information that is missing, you have the option of printing this report as well. You can print them individually if you have 1 or 2 employees, or I'll show you now that Sage 300 has a lovely function called the scheduler. where you could actually email it to the employees from the system, and you could then submit an email to them and say to them that you're giving them a deadline to send the report back to you. So on Sage, you would go to reports, you would double click all reports, you would then expand employee, you would double click the EMP-DETL report, and then click preview, and then you can export that to PDF. Again, this report or this form has all the information of the employee, and then you would be able to, they would be able to fill in correct details. So as I was saying earlier on, that Sage 300 has a lovely function called the scheduler. Now on the scheduler, you can actually email many different reports to employees. About 80% of the reports that are available on the system, you can actually select to schedule to each and every individual employee. If they have an email address on the system will be able to email it to them. So on your Sage 300, you would expand your scheduler. You would double click scheduled tasks. You would click new, and then it will bring you the screen where you can complete all the details and save it. And then you can obviously, because it's a scheduler, you can tell it what time to run. So often people will prefer to send out such scheduled tasks at night so that it doesn't take up bandwidth, etc., and it doesn't interfere with the daily processes, especially if you have to send out many of these reports. The other thing about the scheduler that I haven't noted on here, but it only allows you to email 100 at a time. So if you have more than 100 employees, for every 100 employees, you would need to do a different batch. And you'll see that when you open the scheduler, you can select which employees it must send to. So then you can have multiple batches to be able to send out to multiple groups of employees. Okay, so on Sage 300, you have your, and anybody here that is using Sage 300, I would assume that you do your tax monthly total every month. This is where you print your EMP501. So when you get to August or February, you should already have each month available where you have submitted your EMP501s for each company. So what they suggest that you do is, because often we do adjustments during the year, maybe you've done an update that will now influence the ETI calculations, etc. So what they recommend is that if you know for sure that you have made changes to the ETI setup, or if year-to-date corrections were made, then you have to do this rebuild, or else when you pull through your recon, it's not going to show the adjusted values. So in order to run this report, you need to go into your tax monthly total section. So you go to expand company management. You then double click on the tax monthly total option. You then double click on the applicable month, or select the applicable month and click on detail. So I've already run through this last little bit where it says if you've made any changes to your ETI setup or any year-to-date corrections were made, you need to run the rebuild on all your tax totals for each month. Right, then we move on to the EMP501 report. The EMP501 report will show you, so obviously again here, you're not going to click your live over here. You're going to click recon, because now we just want to make sure that everything is balancing, everything ties up to your tax monthly that you've printed every month. So you're going to go into your exports option. You're going to double click on the tax certificate export option again. So again here, like I said earlier, when you're going into the tax export section, you need to be sure that you are running validations or recons and not the live run. You will only run the live run once you are 100% certain that all the changes have been made, all the information is updated, and you are balancing 100% to your EMP SA. sometimes what might happen is if your EMPSA is not balancing to your payroll and you're 100% certain that your payroll is correct, then you would have to first go back into your EMP201s and request changes to that. And request changes and then resubmit the EMP201s, make the payments with any penalties and interest that might need to be made, and then you can go and continue with your EMP501 submission. So again, you will go back into your tax certificate export option. You will expand the exports option, double click on the tax certificate export option, and complete all the fields that you see here. So you're going to choose your company that you're going to do this for, the tax year that you're going to be doing it for, and then the export type. Again, you're only going to be running the reports, the report only report. And then you click on the export CSV over here, and it will give you the report. Right, so this is what you are going to get into the system. So what is nice about this report is that before you actually export it into Excel, you can then enter in under all the paid columns. So here you will take and I know a lot of people like to cheat because they're very confident. So they just take the total and they quickly copy and paste, copy and paste, copy and paste. But this is actually not a good practice. So we highly suggest that you take your EMPSA or your monthly tax totals or your EMP201 reports and use that to then enter in exactly what has been paid over to SARS for your pay-as-you-earn, your UIF, your SDL, and then also comparing your ETI utilized to check for any differences that may arise. Once you've done that, you can click anywhere in the middle of the report and then export it to XLS, or as you can see here, to your Excel. Okay, reconciling differences. Now, once you've entered in the information, if you have noticed that everything is balancing perfect, from there you can then go back and you can run your live submission and you can submit that to Easyfile. Charlene has already showed you some beautiful steps there, and the slides are on there for you to have a look at. So once you've now run your EMP501 and you find that you actually do have differences, then you need to start investigating to see what could the issues be. So once on that EMP501 report, you will be able to see exactly which month you have an issue with. So there's two reports on Sage 300 that you could use to do this investigation. So you could either use your period analysis report, or you can use your employee 12-month report. When you're running the reports, you have the options to make the correct selections for printing, because, for example, on the EMP1201, the employee 12-month report, if you just put in the dates and whatever and run it, it's going to give you all your deductions, all your earnings, all your company contributions, and all of that. So if you don't want to see all of that, you just want to see the employees' SDL, UIF, and pay as you earn, then you can select those things specifically. So to access both of these reports, you would go into all reports. You go for the period analysis, you would go into payroll, and then you would select the PRDANAREP report. For the 12-month report, you will also go into all reports, and then you would select the EMP 12-month report. Okay, so then you can take this and you can compare it to your EMP501 and also your monthly tax totals that you should have already available that you have printed. So now if you've done a rebuild, you may actually come across differences, and you then will have what you have submitted and your tax monthly total report. You can either print that in summary or in detail. So every month I would suggest that you print it in detail and have that detail available. So when you get to your mid-year or your tax year end, you then already have the detail. So now when you're here and you're looking at what are my reconciling differences, you've got your 12-month report, which you've run now after your rebuild, and you can then identify exactly which employee or employees you have differences on. And then you will need to see what steps you would need to take to be able to go and correct it. Is it e-filing that needs to be corrected, or is it your actual payroll system that needs to be corrected? And then, you can rerun the process again. So possible reasons that you might pick up for not reconciling are the amounts for provision on tax for the annual bonus. A lot of people do provide for the tax on this. There may be something wrong with the calculation. Maybe the person was terminated and, there's still some reconciling issues there. The date of birth of an employee. Suddenly the employee may have reached the age of 65. They've now gone into the second rebate. The date of engagement and the IRP5 start date or the ETI start date aren't matching correct, and this will create issues. On Sage 300, you also have your average tax and your normal tax settings. So often when people go on maternity leave, Sage 300 recommends that you put the person on the normal tax setting, and then when they return from maternity leave, you then go and put them back on the average tax. Now, you may have gone and changed the tax setting. You didn't change it back. The system didn't calculate the annual earnings and correct the tax. And so now at the end of the tax year, you seem to have an issue because every August and February, Sage, whether it's VIP or 300, will do a recalculation on the tax to make sure that the employee is up to date. Maybe your tax type field is incorrect on the earnings screen. You may have lump sums, for example, that you've put on a non-taxable line that should be on a taxable line. So your IRP5 codes are not correct. The tax wasn't calculated correctly. The indication of tax deductions in the tax type field on the deduction screen. So maybe, for example, let's just say it's an RA and it should be a tax deductible, but perhaps you haven't linked it as a tax deductible. So the tax status on the tax definition screen of the employee detail screen, the medical aid history screen. Now, the medical aid benefits is one of the most mundane and irritating problems that we find because either the beneficiaries are not correct or the beneficiaries have changed and the employee maybe informed you, or perhaps there's your medical aid history start date is different to the actual medical aid start date. So now your tax rebate or the benefit that you have is now not calculating correctly. Then you have your taxable earnings on the payslip screen. I've already touched on that. There we go. Taxable perks on the payslip screen or tax deductible amounts on the payslip screen. So there's a number of different elements that could affect your recon. So perhaps you in let's just say July, an employee comes to you and says, well, for March, April, May, and June, I actually had 3 beneficiaries and not 2. And in July, you correct it. However, it now goes and recalculates back to the start date of the tax year, the March, or perhaps the start date of the actual medical aid, which may have been after that date. So it's done a backdated correction. However, your EMP501 is not matching now because you've done a rebuild. So these are all little elements that if you're not aware or you're not really looking for it, they can really create a little bit of havoc in your life when you're trying to reconcile these items. Then we have our ETI, the Sage 300 also has a lovely ETI detailed option. So when you do your tax monthly total report every month, you have an option to choose with ETI. So I would suggest, again, like I said, printing the detail. If you are a company that is making use of the ETI benefits, then I would definitely print the tax total monthly detail report with the ETI, so that you have that available every month, again, so that when you get to this point of reconciling, if you have an issue, then you can go and refer back to those reports and see which employees are different. To access this report, you go into the reports option again. You double click on the all reports option. You expand the payroll option. Then you expand the ETI detail option, and then you double click on the ETI detail report. And this will bring your report up. Again, with these reports, there will be an export option on the ribbon of the screen, or you can just right click in the center of the body and it will give you that export to XLS option. So then you will again take these reports and compare them to your tax monthly total report. And it's the same with all the other reports. If you print these details and you have printed them in detail every single month, when you get to reconciling, you will already be able to compare to see which employees are not balancing. If you are quite good with Excel, you can print these reports to Excel, and then you can use a VLOOKUP system to be able to then compare the two. And that will make your life quite a bit easier when you're trying to do the reconciliation. So this is what your ETI detail report looks like. So it will give you the employees' names, etc. It will give you the ETI remuneration, and it will give you the ETI totals. There were obviously these people didn't qualify, and then it will give you your ETI hours. Great, so that basically finishes up this portion of the seminar, of the webinar. Are there any questions that anyone might have for us? Okay, let's see here. Tamlin says, hi, with all the changes where UIF and SDL is checked as well, if a company didn't pay SDL before, but is registered and has to now due to the 500,000 salary threshold, could it cause problems now? So Tamlin, would you like to unmute yourself and just give a little bit more explanation as to the question? And then, we will be able to answer that for you. Tamlin, are you there? Oh, you don't know how to unmute. Okay, let me see if we can unmute you. Tamlin. It's not allowing me to unmute you. Okay, so let me just you can do sign language or you can just type in the chat. So if I'm understanding you correctly, the question that you're asking is, if the company suddenly becomes due during, one of your reconciling periods, would that then cause a problem? Is that the question? Carl or Jonty, would you like to answer that question?
Okay, so in all, with the information at hand, let's say that in August your company went over the 500,000 barrier, or it is intended to at some point go over the 500,000 in the tax year. SCL needed to be calculated from the beginning of that tax year. So if you were at, let's say you were at 480,000 Rand and you had to employ someone new and that thing pushed you over the 500,000 and you did that in February 2022, you would have to recalculate the SDL going back to the beginning of the year and redeclare all of that. So is it a problem from the perspective of SARS wanting you to do it? No, it's totally doable. Is there a potential for penalties? Yes, there is, and interest. So there is that side to it, and often what would happen is people will put that value in all under a reconciling event. So for argument's sake, a February or a August period, they would put all of those that calculated value to try and reduce the penalties and interest that is due. We would not recommend doing that, because if you go under audit, that could then come out that you are trying to avoid paying the PAYE. Avoid paying the penalty. So Tamlin, I believe you are now unmuted.
Yes. Sorry. What we picked up on is there's a few clients that are SDL registered, but they haven't been paying SDL. And their year-to-date shows they were actually supposed to have been. So basically, we want to know if we just start now, say from September, to actually declare SDL now, and we just leave the first 6 months, would SARS come back with an audit?
I would suggest that almost certainly they would, simply because, if you were meant to be paying SDL, you were meant to be paying it for the entire tax year. So even if your salary bill only went over in the last month due to an unforeseen circumstance of including somebody new on the payroll or whatever the situation may be, the calculation is retrospective to the beginning of the tax year. So I wouldn't go back and do anything to the previous tax years, but I would definitely suggest that you look at going back to the beginning of the tax year and resubmitting all the 201s with the correct SDL in them. Obviously that's not great news, but it is legislatively the way to go forward with it.
Thank you.
Excellent. Do we have any more questions? Okay, great. So we just want to say thank you so much for joining our webinar today. If you have any further questions once this is completed, you are more than welcome to go to our website. We have a lot of information available there. This webinar will also be on there. However, we will be sharing this with you after a couple of days once everything has been put together nicely for you. And we would also like to ask you, please, if you've enjoyed the webinar, if you have found it very helpful, would you please be so kind as to like our webpage to create more awareness? We will be doing many more of these webinars, and we would really like to get some information from you, whether you enjoyed it, whether there was more information we could have provided, just some feedback from you, and obviously a like, and that would really be helpful to all of us going forward. Is there anything else that you would like to add, Charlene or Carl or Jonty?
Thanks, Sam. That's what I was going to bring up. Just guys, if you've enjoyed it, please hit the likes. If you would like to see other information or you would like to get more information about these, go down to the website. There's in the region of about 50 of these webinars that have been held over the last year or so. That are available on the website for you to go and have a look at. Go along, have a look, see if there's any topics that interest you. Thanks very much for your time today.